Hello everybody, welcome to our webinar series. It is a very special webinar today on behalf of Online Trading Academy. My name is Merlin Rothfeld. We've got a very special presentation today. Normally, you kind of get me here all by myself talking about a specific issue that we have a crack team of researchers working on and hopefully giving you some great information. Today I'm very pleased because I'm not solo. I'm actually joined by a wonderful guy I've had an opportunity to talk to over the past couple of weeks. Justin Arneson, PhD and a senior researcher and data scientist over at Myers-Briggs, and we're talking psychology. So Justin, how you doing today?
I'm doing very well. And yourself?
Any better, I'd be twins.
Oh, that's great to hear.
You know, one of the things that's interesting for me about trading is I've been trading for 25 years now, and if I go back to the very beginning, nobody taught me the importance of psychology with regards to my personal investments. So I'm excited to be doing this today and hopefully giving out a lot of information to our viewers. I know we're broadcasting at Myers-Briggs page on Facebook. We're also broadcasting at Online Trading Academy's YouTube page. So hello everybody out there. And judging from the responses I see, we have people from all over the world. You guys are putting in your locations. I appreciate that. A ton of diversity with regards to where we're all from. So as we progress through today's webinar, please feel free, guys, to send in comments or questions, and I'll do my best to moderate those and engage those into our conversation today. Now, let's go to a visual here. When I got started back in 1996, I was still in college and I was looking at the financial markets. Nobody ever told me the psychological aspects of it. But we got to go back one. Yep, there we go. The thing that's interesting about this is when you look at the surveys that were done, and we did one at Online Trading Academy to give you an idea of does personality play a role in how you trade and invest. And fortunately, 97% of you said that you agree. I would love to meet the three of you that feel that your personality doesn't play a part in this. You have a infallible personality apparently, but the good news is most of you do agree that it is a major part. Now, if we break this down a little further, and kind of dissect how significant psychology is, this is kind of a subjective visual here. When I really began diving deeper into this in the late 90s, most of my professional trader friends, the guys who are doing this for a living, were saying, look, trading is between 70 and 80% psychological. So I decided to create a graphic that kind of meets us mid-ground here. And it says, look, it's 75% psychology. Meaning the structure, the planning, the techniques that you're using, the analysis, whether you're using Bollinger Bands or MACDs or portfolio theory, are one small piece of it. It's how we apply all of that analytical data that becomes a real challenge, and thus the psychological impacts of it. And I struggled early on to understand what my personal problems were, and we'll address those today. Hopefully some of you have learned yours. If not, we will help you learn those today. We'll begin by diving a little bit into the understanding of personalities. And Justin obviously has studied this a lot more than I do, having a PhD in this subject. Justin, talk to us about how personalities break down. I know you kind of mentioned when we talked earlier that there's two major breakdown classifications.
Yeah. So, just broadly, our personality represents our typical ways of responding to and behaving in the world. And they tend to differ in predictable ways across people. But one way of thinking about or organizing personality is in terms of how we perceive the world and then how we use those perceptions to inform our judgments about behaviors and how to interact with the world. So those are kind of the broad bucket perspectives. And two people could be placed you and I could be placed in the same situation, but with our different personalities, we're perceiving that situation very differently, and that's driving our behaviors very differently. And so, this is evident across contexts, whether it be in the financial world or whether it be in your everyday life, interacting with people at work or at a party.
Yeah, so you've got perception, which is, you mentioned things, ideas, happenings, and people, which I think we would all agree that as we go through our day-to-day lives, and it doesn't have to be financial markets, really, this could be anything that we do. Those are four of the major factors. Of course, there's many other things that could influence our personalities or how we establish our personalities, but those are four major ones. And then the judgment is really, if I'm correct, is how we take all of that and apply it to ourselves and how we apply that information to other people, correct?
Correct. Yeah, and in judgment, we have to keep in mind too this personality at this point in our lives, and in most people's lives, as you hit your late 20s, is pretty well ingrained. And so our typical ways of responding to situations, have worked for us, and they're kind of our default mode. And so they're generally subconscious, and we don't think too much about them, which in a lot of times in our everyday life gets us by just fine. But there are certain circumstances where that can hold us back. And so that's certainly, going to be the focus of some of our conversation today, is where some of those pitfalls might be in our standard ways of interacting with the world.
Absolutely. Now, when we look at how we establish our personalities, obviously many of us are very different in our personalities. We could make the argument that we're born with it. And I think that that's a nice starting point out there is, hey, we're born with these personalities. The other argument is that we develop these. How does that process work?
Yeah, so as with most things in psychology and in life, there's typically not an easy and straightforward answer. There are a lot of studies out there that show that roughly 50% of your personality can be attributed to your genetic composition, whereas roughly 50% can be attributed to to environmental factors. And reality is that's an oversimplification. Obviously, these two things interplay and affect each other very much. But one of the things to keep in mind is that even though we're born with kind of a genetic predisposition toward a certain set of behaviors, that doesn't mean that those behaviors can be changed or adapted or adjusted over time. And so, we learn how to cope with the world as we grow. And then, as I mentioned earlier, usually by the time we hit our mid to late 20s, we've pretty well established our standard ways of interacting with the world. But that doesn't mean that we can't take steps and take focused steps in terms of growth and development at that point.
Sure.
And then that's really where we come in terms of understanding yourself and understanding where you can grow.
It's interesting when we look at it, when you mentioned that we're in our 20s as we're kind of established our personalities, which could be potentially challenging when we look at this from the investment perspective, because let's be honest, most people aren't in the financial markets in their teens, right? If you are, congratulations. I wish I was when I was in my teens. I started in my late 20s, and at that point my personality was relatively fixed. And the viewers who might be new to financial markets, you might think that that's not a big deal, but you have to understand that as we've been growing up from your adolescence through high school, through college, even your adult life, you are trained and conditioned to think that the markets operate in a specific way. When I got my finance degree from university, I thought that this is the way that the markets worked. I was trained and conditioned and educated to believe that this theory works and there's efficient market theory and blah, 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 blah. And when I finally got into the real world, trading with my own accounts, my own money on a daily basis, I realized it was the exact opposite. The collegiate education taught me incorrectly how the financial markets work. So if we have been trained and conditioned and developed our personalities and been maybe molded and shaped by what the financial institutions want us to do, I think many of you can see that herein lies the challenge, is how do we overcome that information? Because we need to make changes to the way that we perceive information and act on that information that has been, again, misfed to or misinforming us for the better part of our adult lives. So that's a very challenging piece, which we'll talk more about today when we dive a little bit deeper into my trading. Talk to us about self-awareness. I know that this is a big one. We have a couple of PhDs that I work with as well. They're always really big on the self-awareness aspects of psychology.
Yeah, so for us, self-awareness is the price of admission. In order to make steps in terms of learning and development, you have to know yourself and know where your strengths and opportunities lie. And so that's where our assessments like the Myers-Briggs type indicator or the MBTI come into play, or also another one of our assessments, the California Psychological Inventory or CPI, offers another perspective, more based on kind of how others would view you and your reputation. And so these are a couple of assessments that fundamentally want to get you just to understand yourself. And then on that basis, once you have that starting platform, you can build off of that and really grow and identify those strengths and opportunities.
Nice. I had the pleasure of taking those 2 tests today. Actually, not today. I took those a week or so ago. Rather interesting because I think a lot of us have an idea of what our personality types are. We'll look at the matrix here, which has kind of 16 types broken down. I'll tell you a little about mine as we progress, but I actually thought I was something different. I looked at these kind of 4 qualifiers, which Justin and I will take a look at here in just a second. And, I sat back and said, let me just analyze. What type of person do I think I am with regard to these 4 pieces? And I wrote it down, and I had an idea. I took that test, answered the questions of both the MBTI and the CPI test, and it dives a little bit deeper into some of the things that I didn't know about. And the results were, I would say, surprising for me personally, and maybe for some of you who've taken this test, you'll figure that out as well. But I would encourage you to explore those personality type tests if you'd like to know more about your personality type. Walk us through, because I know with the MBTI you kind of break it down into 16 groups, which we'll look at here in a second. But let's go through the qualifiers of what are these kind of 4 big. Actually, we're not going to the 4 bigs. We're going into the advantages right now. Sorry. Tell me about the advantages and disadvantages. We'll start with the disadvantages of these personality traits.
All right, yeah, that sounds good. First of all, I want to back up and say, you talked about identifying a couple of areas where you were surprised by your results, and I think that's certainly a key to the assessment, and a reason why the assessments are so useful is it provides another lens. Certainly, you can talk to a loved one, you can talk to coworkers, and they can help you paint a picture of your personality, and your own introspection can help you paint a picture of your personality. But having this additional lens can help identify certain things that you wouldn't have identified previously. So I think that's a very important point and one that we'll revisit later. But yeah, in terms of advantages and disadvantages, I think we have a slide that was a good reference here in terms of where our personality can play a role in the investment world. So, in terms of disadvantages on this side, we have some things that what I would consider, and I think what most psychologists would consider, relatively easy to remedy. So, are you vengeful toward a stock? Are you fearful? That may be getting at some underlying characteristics. But are you greedy? Are you are you aware of the latest information and want to capitalize on that? Are you overconfident? And these tend to be, if you look at them, they tend to be very emotion based, and characteristics that are very emotion-based, you can learn from very quickly. Like you mentioned, once you got out in the real world after learning what you learned in college, it was a very different beast. And I think once you're applying your own money and you have skin in the game, and you learn a few lessons about maybe overconfidence or being a little greedy, those lessons take hold pretty quickly in terms of these characteristics. So those tend to be big lessons that you can learn from and adapt to pretty quickly, and that stick with you.
One of the things that we do a lot of is journaling, and really we're advocates at the school of journaling and making sure we understand exactly what it is we're doing right or wrong. And the difficult part about doing this by yourself is quite often you don't know exactly what it is that you're doing wrong. It took me a while at the very beginning to understand that these are a lot of the major issues I have. So, for example, as we look at this list, we've kind of broken them up to easy to remedy and hard to remedy. Now, vengeful towards a stock. I'll give you guys just a personal story. I had an issue with Apple stock. I know some of you are Apple lovers. Don't hold it against me. I had an issue where all of a sudden I, for some reason, could not find a winning trade. I couldn't buy a winning trade on Apple. And this is going back to the late 90s, going back to 98, 99. And I would sit there and I'd be trading Apple and I would lose. So all of a sudden I'm like, damn it, I know I'm good at this. I know I can beat Apple. I'm going to trade bigger share size. So I go from 1,000 shares to 2,000. And I'd lose even more. And I'm like, damn it, I'm doubling up again. I go to 4,000. All of a sudden, I don't know what it was about that Apple stock, but my emotions changed. It got the better of me. And all of a sudden, what I should have been doing, which is following rules, following discipline, making sure I had a stop loss in place and having a plan, went out the window because I have to get back at this stock. I have to get that money back. Huge learning lesson for me. So page 3 of my trading plan, which is a very long document, I have on the top of the page, a red an Apple logo with a red circle around it and a line through it. So as far as easy to remedy, in that situation, I realized that there's something emotionally attaching me to this specific stock. And for you, it might be a currency pair, it could be a futures contract, it could be anything. But if something is causing you losses in the financial markets, and of course you guys can transcribe this into something in your personal life equally, then what we need to do is we have one of three options. You can work really hard to fix whatever that weird little vengeance piece is, or in the case of me, I said, I'm just eliminating that from my selection pool. I'll never trade Apple ever again until the day I die, and I'm still not going to trade Apple, even though I have an Apple product. It's just the stock, for some reason, got the better of me. Being fearful, being greedy. These are things that by having a trading plan and writing out a document of how your actions are going to be performed offers structure, which allows you to kind of change your some of those deficiencies that you might have with your personality type. Anything that I went on there, Justin, that was kind of out of line, or you see that might be part of the problems of these disadvantages?
No, I think you're right on track there, and we didn't rehearse this at all, but that corresponds very well with your results. And so, we talked about your specific results ahead of time, and you were comfortable with disclosing those. So
sure, absolutely, yeah, share with the audience.
Yeah, so we'll dive in deeper to the individual components, but your MBTI type was ESTP. And so this generally is indicative of someone who likes to live in the moment and can run the risk, depending on past experiences, of kind of jumping into decisions before they have all of their information, and taking some potentially unnecessary risks, and then becoming emotionally invested in those risks once you've committed to them. And so that seems to be what has played out. Now, the important thing is, did you learn from that experience? And I'm assuming over the growth and trajectory of your career that you have learned from from those experiences and have adapted your behaviors accordingly to address those opportunities.
Yeah, absolutely. I absolutely have, and it was challenging because I had to be brutally honest with myself and say, hey, you know what? You're being an idiot. Stop. It's not working. And if you look at your personal lives, and let's say you're in a relationship that's just not working, and you know what? You can work really hard and get counseling and therapy to try to fix that problem, and sometimes the easiest solution is to just cut it off. And that was a tough one for me to swallow. I'm going to go through another one here for the viewers out at home, which I'd love to get your feedback on this one, Justin, because we didn't get a chance to rehearse this one. I was at a trading convention many years ago, and I used to do the trade show circuit, which for those of you who have never been on one is a great testament to a lot of snake oil salesmen in the industry. These guys are selling you everything under the sun. And I went to a psychological presentation, and the woman got up in front of the room and she says, all right, everybody, I want you to start off right now by thinking about your coffee table at home. And I'm just rolling my eyes going, coffee table at home? I'm here to learn about psychology, trading, and making money. And she says, your coffee table at home, is there clutter on it? Is it disorganized? Is it like beer bottles, an empty bag of chips, and magazines, and it's just dusty with dirt from the years? Or is it like precisely lined up remote controls and very clean and organized? And you kind of think about that for a second. And she says, if you have the coffee table that is very disorganized, you're probably going to struggle at the beginning, because if you're disorganized with something as simple as your coffee table, then your trading life is probably going to be just as disorganized. And of course, you look at the coffee table and it's a complete mess. That means your trading life could be a complete mess. So she says, one of the first things you should do after this presentation is to go home, take a look at your coffee table. If it's unorganized and disheveled and just a total mess, then clean it up and start getting in the habit of keeping that thing in order. And that will start to spread from that coffee table to other areas of your life, and ultimately you can bring that back to your trading life. And I found it profound because my coffee table was pretty good, maybe a little bit messy here and there, but I did start to keep that more organized and more structured and clean, and I did notice an impact on it because it made me focus on keeping things organized. What do you think of that as a learning lesson?
I think that's a great learning lesson and a great example, and that one example is something that's built into like our assessment, for example. So that may be one item in the assessment, and we'll have multiple other items that get at that sort of issue. But in terms of rectifying the issue, you hit the nail on the head. So once you've identified the issue or the problem, it's about, okay, what steps do I need to take to mitigate this in my everyday life? And we know from psychological research that self-regulation, or our ability to regulate our emotions or behaviors, is kind of like a muscle. And so it works best if you start out small. So that recommendation to, okay, let's focus on the coffee table and try to keep that clean for a week. Do your best, focus on that. That's going to start to build that muscle, and then you can expand that into other areas of your life. And so, again, back to that fundamental self-awareness. Once you have that, you can start to foster and build your environment around you so that you can maximize your potential.
Yeah, absolutely. A couple good comments here. Stephanie on the Trading Academy's YouTube page says, "I wonder what our downfall is." I think it's a broad generalization. Here's the thing that I've learned over the years of doing this. Everybody has a downfall. We all have an Achilles heel, especially when it comes to financial markets. Some of us might have more than one. The key is to identify it, which is kind of what we're talking about here today with these tests, the MBTI and the CPI test. For those that were wondering, MBTI stands for Myers-Briggs Type Indicator, and it's not that it's going to all of a sudden magically cure you by any stretch of the imagination, but it will make you aware of some of the issues which may be present in your specific personality types. I know employers use the MBTI test excuse me, a lot to help understand where the strengths and weaknesses may lie for a specific employee, and they might be good in one department versus another. And I think at a high level, we can start to make those assessments. We still need to dive deeper into each individual case, because I can tell you what caused me huge financial losses when I started may not be the same for you when you start, but there's going to be something that drags you down. We just have to identify it and hopefully find a way to remedy that and move on and just get better and better and learn from whatever mistakes we made in the past. Okay, so those were the disadvantages, which of course to me are the most challenging. Justin, talk to me about some of the advantages, some of the things that are working for us.
Yeah, and if we can, there's the slide I was looking for. And I wouldn't necessarily put easy to remedy in here, but the things that are really going to be helpful for you are, being disciplined in your approach, being decisive, being patient. Those two may seem like they come into conflict with each other, but in terms of your personality context, it's a matter of and introducing just your base of knowledge into the equation is a matter of identifying when you have enough information to make a decision, but being patient enough to gather that information. But the one I want to really focus on is this teachable and coachable. So, I hit home again and again how important it is, how important the self-awareness aspect piece of assessment is, of our assessments are. But that doesn't do much for you unless you're willing to take a look at what area of your life you want to address, and apply any teachings or coachings to that area of your life. And so this openness to being teachable, this openness to learning and development and growth is going to be critical, and that's going to be one of the strengths that I think is most important to develop and to work on.
Absolutely. And when we look at this list, TJ, if you wouldn't mind bring that one back up. You're right. You say easy to remedy. Maybe that's not the right wording. And I agree. You're not trying to remedy this. What these should be are building blocks. And I feel that we all have these traits within us, being disciplined, decisive, patient, teachable, coachable, flexible, and having humility in what we do. Some might have varying degrees of it, but we can build on it. And the point here is it's a process. And as we start to get better at being more disciplined, then maybe we start writing down more rules and we start following those better. So it's about taking steps and building on these advantages and making sure that things get better and better and better for us. One of the comments in here says, fear of missing out is a big one. Yes, fear of missing out is a big one, but you have to understand with regards to financial markets, it's like looking at the ocean and saying, oh, I'm bummed I didn't catch a fish today, or I'm bummed I didn't catch that fish today. Who cares? There are trillions of other fish out there. Just like in the financial markets, there are so many opportunities. I could look at a chart right now on this program and find an opportunity in something. I can go to corn, wheat, soybeans, the currency markets. I could look at the S&P indexes. I could go look at different industry sectors such as technology, healthcare, consumer staples. There's always an opportunity. So when you have that moment where you go, oh man, I'm going to miss an opportunity, don't. There will always be another opportunity. That is what's so great about the financial market. So don't fear missing out. And yeah, there was a great comment in here that says, an individual felt he asked a dumb question. There are no dumb questions, guys. It's better to ask a dumb question than fix a stupid mistake. So anyway, that's how I go. All right, let's go to our next one, TJ. This is another poll that we ran. This is on our Twitter feed at tradingacademy.com. It says, what type of lifestyle is more appealing to you? A structured, decided life or a flexible and adaptive life? 73% saying more flexible and adaptable. These are kind of the classifications and some of the little characteristic breakdowns that go into your MBTI types. So Justin, walk us through the combinations here. You don't have to go through all 16, but I know that each one of these 16, and many of our viewers out there today, we've got a lot of INFJs. Hello, Sam. We got a lot of different personality types. A lot of people have taken this test and speak very highly of it. I'm definitely a fan as well. Walk us through how these types are comprised. I know each one generally has two different breakdowns. So start us off with our first one.
Yeah, so I think the best approach to take here is, well, so one, I would encourage, we have MBTI derivatives and imposters. Imposters seems like a strong word, but they're all over the place. So I would highly recommend, and we'll direct you at the end of the presentation here to go to the resources that we've provided to you to get the official MBTI assessment, so that you can be confident in your results and confident in how to apply those results. But ultimately, yeah, the MBTI classifies personality in terms of these 16 buckets, which are comprised of 4 different preference pairs, which we'll walk through. So, we'll start in the top right. Just for example, is that ISTJ is looking at introversion, extroversion. SN is sensing and intuition. TF is thinking, feeling, and JP is judging and perceiving. And so each of those, and if we had more time, we could dig into, the whole is greater than the sum of its parts. So each of those preference pairs has meaning, but when you put them all together, that also results in something greater than each of the preference pairs in isolation. And so that's also a deeper dive that we can offer in some of our supplementary materials once you dive into your MBTI assessment results.
Cool. So let's take a little more time to walk through those 4. So you have the favorite world. I kind of like the way you guys phrase that. The favorite world breaks down into two categories. Let's go down that path.
Yeah, so we have extroversion and introversion, and this is one that is probably most commonly known by people. Mm-hmm. This gets at where you focus your attention, so and your energy. So those with preferences for extroversion tend to focus on the outer world of people and activity. Those with preferences toward introversion tend to focus on the inner world of thoughts and ideas. And in our framework, in the MBTI framework, one isn't necessarily better than the other. There may be circumstances where one preference may be more beneficial, right. But one isn't inherently better than the other. And in this example, I can point out, and I don't want to focus too much on the negative, but a couple of things to watch out for each type here. So if we focused on the extroversion preference, for example, people who fall in this preference category tend to prefer to get their information by communicating with others. Mm-hmm. And so you can see that can work to your advantage if you are communicating with trusted and reliable others. But if you're getting your information from a less trustworthy source, then that can be an issue. So something to consider if that is your preference. And then on the flip side, if you have a preference toward introversion, you may be missing out on some of these conversations that are happening behind the scenes, that are providing some valuable information that can fuel some future action. And you may be digging into the data, but you also may be closed off to some other data that is presenting itself. And so there are upsides and downsides to both of these. And again, back to that self-awareness, I'll probably say it 50 times as we go here. Once you're aware, then you can act. And so that's the foundation here.
Sure. For these two, I'm clearly, guys, anybody knows me knows I'm on the extroversion side. I don't think that's any surprise. And I think just from a trading perspective and analysis, I would say that extroversion might be a benefit here because generally the extroverts are going to go out and seek community. You might be much more active in the XLTs, you might be much more active in Mastermind, and you'll be utilizing the community that we have at Online Trading Academy. I think that that's going to be a huge benefit. Sometimes the introverts feel like they can just be by themselves and rather be alone. That's dangerous in trading because remember, if you're doing this by yourself and you're kind of all alone, who's going to help you when you're making mistakes? Who can help get you out of that negative run that you go on sometimes where you just seem like you lose every trade? So extrovert's certainly a benefit there. Not that you have to be, but I notice we have a lot of introverts in the crowd, which is kind of funny. All right, next one, personality types, information.
Information. So we're looking at here sensing and intuition. And so these preferences reflect how you like to take in information. So this gets back to that perceiving part of personality that we talked about at the beginning here. So people with a sensing preference are those who look at the world and prefer information and data that is real and tangible and concrete and right in front of them. Whereas those with an intuition or preferences for intuition like to look at the bigger picture, like to think in the abstract, and look at kind of macro level events. And so again, you can see the benefits and pitfalls of each. If you over rely on one, if you're too focused on the data immediately at hand, you may miss relevant information that's happening at the macro level. Whereas if you're focused on the big picture alone, you may miss some details that could be very helpful in the short term.
For when I look at this, and again, I'm just applying this to trading and investing. I know we could look at it from a lot of different aspects, but sensing is basically going off the information that you have. Intuition is kind of going off gut feel. What I've noticed when I was operating off of intuition back in the late 90s, a lot of the time what it was doing for me was causing me to deviate from my plan, to not follow my rules because I just felt like this was going to happen. And to me, that can be a very negative thing. Certainly, if you do this long enough, there's some gut feel that comes into it, but you certainly want to be following the plan and rules, which is what we're big advocates here at Online Trading Academy, is making sure that you have a rule in place, you have plans, and you follow a structured plan. All right, our third category is personality types and how we come to decisions.
Yeah, I think this is a really critical one, and it's easy. This is one that it may be easy to assign some value judgment to, but I think this is one that's worth really thinking about in more depth. So, like you said, we talked about making decisions. Those with a thinking preference are individuals who tend to be very logical and rational in their approach to decision making. Whereas those with preferences for feeling tend to consider how they're going to feel about the outcome of the decision and about how people they care about or people who are going to be affected by the decision may feel by the implications of the decision that they make. And so even though historically behavioral economics had said we act in our self-interest and we act very rationally. In reality, when we're dealing with our money, that's very personal, and we're investing in ourselves, in our families, in our future. And so feeling is, even if it's hard to recognize, feeling is going to play a large role in our behaviors here. And so I think that's something that a lot of people, and also, and I think like you had the breakdown in your online poll at some point, and there was a heavy bias toward the thinking, and it makes sense, given this sample. But it is important to make sure that you're balancing out. We know that in the U.S. as a whole, about half the population has a preference for feeling, and so there are plenty of us out there who have that, and it's not bad. Nope. But again, it just enters the equation of when is it going to suit me, and when is that going to be in my best interest, and when do I need to be aware of it and balance that out with the data that I can gather through thinking and more logical and rational based approach.
And I think that's the important part, is just being aware. Again, a lot of you have been talking about your different profile types, and I look at mine, which is ESTP. I thought that I was actually ESTJ, which we'll talk about here in a second. it's really about being aware of that. It's not saying that, hey, if you're someone who's more of a perceiving versus judging, that you're headed for huge problems, but just being aware that there might be this issue. And if you keep looking at your profile and you realize that a lot of what you're doing is operating off of feelings or opinions about things, then that's probably going to give way to being inconsistent with regards to how your results are showing up. So walk us through a final one here, personality type structure. This is the only one that I didn't get when I was planning out my personality types, perceiving and judging. What do these two tell us?
Yeah, so this broadly looks at kind of your lifestyle approach. And so those with preferences for judging are those who tend to like their days planned out. They like deadlines, very orderly, very structured. Those with a perceiving preference tend to be more open, tend to be more flexible, more spontaneous, more adaptable. And so this, kind of was interesting relative to some of the data that you gathered in your Twitter poll, in that I think, on its face, we want to feel as though we're open to new information and we're adaptable. But from an investing standpoint, as you say, it's important to lay down that structure and to adhere to that structure, unless provided sound enough reason to deviate from that. And so those are important considerations with the judging and perceiving preferences.
Yeah, they are, and I thought I would be the J. I thought because I feel like in many cases, and I think this is actually a good point. There was a gentleman who posted, Canty Calloway says, "Is it possible to be situational or at least not skewed one way or the other?" Yeah, again, this personality test or this type test is really lumping into big buckets. I personally do think that things become situational, and I know that in my personal life versus my trading life, I operate very differently. In my personal life, I'd say I'm much more free-flowing. With regards to trading and investing, I'm way more structured, and the only reason that is the case, I believe, is because I know I have to be. I know that every time I deviate and kind of shoot from the hip or go off gut feeling or don't stick to the rules, which you write these rules down for a reason, that I don't get the results I want. And it's hard to go back and evaluate your trade plan, your journal, your log, if you will, and find out what you did wrong when every time you're shooting from the hip. So if you do the same thing over and over again as far as process, steps 1, 2, 3, then I can go back and identify, I messed up on step 3. And that becomes easier for me as a trader to help diagnose what some of those disadvantages are if it goes back to personality trait, and then work on fixing that. So I do believe that things are situational. Do you, Justin?
Yeah, things are absolutely situational, and in the particular example that you offered, I would suggest that in all likelihood, that perceiving preference does seem to be a good fit, and this is judging from 10,000 feet here, but being an intelligent person and having that exposure early on, and maybe some tough lessons early on, you learned the value of adapting that preference. And so, we often talk about your opposite preference as, your preferred preference as writing with your dominant hand, and your opposite preference as writing with your non-dominant hand. Mm-hmm. And so what it looks like is, you learned early on that you needed to develop that non-dominant preference in order to be successful. But certainly, this is we treat this as one data point, and it's supposed to inform, multiple perspectives on you in your everyday life, and so how you react in a given situation is definitely susceptible to the characteristics and the demands of those situations. And some situations have higher demands than others. Right. But again, going back to, if you know where you are fundamentally, then you know your typical reactions in those situations, and you know what reactions you might want to mitigate or what reactions you might want to play up as strengths.
One of the things we talk about quite a lot is understanding these personality types, and let's understand that part of what we're looking at today is saying, okay, here are the major personality types, and you fall into probably one of these groupings. We can look at that as half the battle, because as G.I. Joe says, and knowing is half the battle. So your personality type. If you flip over and look at whatever you're doing, whether it's a relationship, whether it's your job, whether it's trading the financial markets, each one of those scenarios requires different, let's just say, attributes, right? You may need to be a bit more open and free-flowing in a relationship, whereas the financial markets, you need to be a little bit more structured and disciplined. And the only reason I figured that out in the financial markets is because it kicked my butt over and over again. So I finally realized, hey, I have to stop this and figure out what the demands were of whatever it was I was trying to accomplish. And knowing my personality types helps me identify, hey, you know what? I need to work on this, or I need to fix this piece, or this is a real strong suit for me. I will continue to push that one. So there was a good comment here by Suresh that says, do the types change over a period of time? Which brings up the question, do these traits change, Justin?
Yeah, and again, I'll give the stock answer of there's no easy answer there. I would say, fundamentally, again, as we hit our mid-20s, our types, those underlying tendencies are going to remain relatively stable, but they can change. And then, what we can see too is we see types as underlying behaviors. And so if we're looking at, management and executive populations, and I'm just applying this to the work world, which I'm most closely tied to, we're dealing with, smart people who know that in order to get along, they need to behave in a certain way in a certain context. And so they may be asked to, or in order to be successful, may have to engage in behaviors that don't correspond to their natural tendencies or type. And so this can be, draining at the end of the day if that's something that they have to do consistently. And so the long story is that fundamentally we think that, we have evidence that your traits and your types are going to remain relatively stable, but the behaviors that manifest from those can change over time, and that change, and a lot depending on the type we're focusing on, or depending on the behavior that we're focusing on, that change can be relatively easy, or in cases of things like organization and that sort of thing, it can be more difficult. And you have to build your environment and build a support network so that you reinforce those positive behaviors, and really build up those positive behaviors over time.
We talked about awareness early on, and really that's what it boils down to, is just being aware that there are certain things that we all do well, there's certain things we all do poorly, and understanding how those impact the different things that we're trying to accomplish. There's a great comment from Dave, says, traits can change with age and experience. Absolutely. I mean, we spend our lives from the moment we're born building a skill set, right? And whether that's your parents shaping it or society shaping it, we don't have much of a say when we're young. When we get older, we do have a say, and we do have the ability to change these traits. Unfortunately, some people get so entrenched in a way of doing things that they don't want to change at all, and they'll just stay where they're at. That's fine. But for those of you who are thinking of, getting into the financial markets, I know many of you that are on with us today are Online Trading Academy graduates, and that's great. You understand that there is a need for adaptation and a need to make changes to the way that you process information. And like some of you pointed out, if you're trading the NQ or the 10-year, you're trading, lean hogs, they're all very different assets as well that need different skill sets. So great comments in there. So let's get to this. I know a lot of you have been asking about the link here. The next question is, what are our next steps? And there's quite a few things. So what I'm going to encourage you guys to do is either grab your phone and take some screenshots, because there's a lot of different kind of calls to action here for you and things that we just thought would be very helpful to you. So grab a phone, maybe take some screenshots of it, or grab a pen and write these down. The next steps really, number one, we put together an interesting infographic. I'd love to thank our team on both sides for putting this infographic together. It will help you understand some of the common psychological challenges and how to tackle those challenges. You can access that. It's free. Just go to ota.buzz/psychology. That's ota.buzz/psychology to see that great infographic. And again, thanks to both of our collective teams putting this together. It's simple, easy, and hopefully get you thinking on the right path. The other thing is, I know many of you might be listening in from the Myers-Briggs channel. If you are new to trading and investing, would like to have a more structured approach, that's what we do at Online Trading Academy. You can register for a free webinar by going to www.otawebinar.com. Now, let's talk about the personality test, because many of you have been asking about that one. If you're curious to learn more about your personality type, there are multiple tests. There's the MBTI, which is kind of your starting point. Then there's the deeper dive, which is the CPI. The folks at Myers-Briggs have given us a 20% discount on that test for everybody watching the webinar today. If you use the promo code INVEST, I-N-V-E-S-T, just go to MBTIonline.com and you can take that test there at a 20% discount, which is great. And you get a nice little printout of it as well. If you're a business owner and we're thinking maybe about using this for your company, well, I would encourage you to do that as well. You can visit MyersBriggs.com. Maybe there's some package solutions here for your team or your company. And as I've done this, I kind of would love to know how my whole team or my company kind of fits into this too, because I think that there's certain personality types that I just get along with and don't get along with, and it'd be funny to see the ones that I don't get along with and be like, yep. Like, where's the list of all those folks out there? So there's a couple of great resources for you. I know some of you have been asking about the test. The one that we were referencing earlier that I did that Justin was talking about, where it gave me that ESTP profile breakdown. What they do, you can come back here, TJ. They give me a great little report. So I'm not going to, you guys won't be able to read it all, but they give you a great little report rundown. And actually my favorite part about this is it talks about my personal breakdown, which is ESTP, which I thought was ESTJ. So, and what are my strengths and weaknesses, and what are some areas that I need to work on? And it was very interesting because I'm one of those people that I'm very objective. I'll take a step back and look at the big picture and read what people are saying, especially from a psychological perspective. And a lot of the things that they said I do well, they nailed it. I actually am very good at some of these things. And actually, some of the areas where I need improvement, I know that, and I've known that for a while. So it's nice to have confirmation that I'm on the right path. So now I'm going to make a little bit more concerted effort towards addressing those issues, not just to help with my trading and investing, but my personal life as well. So I'm hoping that you guys got some good information out of this. I know we're going to dive into charts here, but just really, I was going to sprinkle on some of my personal trading experiences, and Justin, with his extensive experience in the psychological aspect, was going to walk us through MBTI and a little bit of the CPI. Justin, any final thoughts for our viewers at home, or any final questions from our viewers?
No, I would just say I would encourage you, the more knowledge, the better. I'm definitely a data guy, and so, I would encourage you to go out and take these assessments, and really take an honest look at what your characteristics, where your personality types lie, and see where that is suiting you to your advantage, whether it be in the investing world, whether it be in your personal life, whether it be at work. They do, again, it's one data point, but it's certainly a useful data point that can be leveraged in multiple aspects of your life. So I would definitely encourage, using that data to your advantage.
Awesome. Well, Justin, I want to thank you so much for joining us today, and all the folks over at Myers-Briggs for helping us put this webinar together. It's been fun. I learned a lot in the process. I hope our viewers did as well, and I thank you so much for helping us create it.
Great. Yeah, thank you. It was a pleasure to join.
And for all the viewers out there, yes, I know a lot of you have been asking about the archives of it. We'll post this video to be archived online. You can go to Online Trading Academy's YouTube page. You'll see it there. Again, thank you all for the questions and participation. I know we have a lot of introverts in the audience today, so we're with way more I's than there were E's in the audience today. So thank you, introverts, for participating, sharing your thoughts, your feelings, and everybody. So thank you guys so much. I hope you enjoyed this webinar. Again, if you want to see the archives, you can go to Online Trading Academy's YouTube page, or follow some of those links we posted earlier to take the MBTI test, or learn how to take a class with Online Trading Academy and see if we can help change your financial future. Until then, happy trading, everybody. We'll see you next time.